Hello, everyone, and welcome back to the world's best investing podcast. Today, I have here with me Eric Santa, which is an alumni of my Techstar Goldmine course. After he finished the course, he did a deep dive on Plaid, I believe it's pronounced, which he believes is something like the Apple for electricians. We cannot disclose whether he has a position or not, um, per legal reasons on his end, but he basically developed this conviction after doing the deep dive, and the stock is up big time. How much is it up, Eric, since then?
I think it's around 140%, something like that.
140%. So amazing stuff. Eric, welcome to the podcast. Thank you very much for coming. The stage is yours. Give us the Plaid pitch, please.
Perfect. Thank you, Antonio. Glad to be here. Well, first of all, I just wanted to say that this is not financial advice, so please do your own research. Now, let's talk about Plaid. So the company was founded in 2009 and it IPO'd in 2016. It's very important to know that the insiders own about 30% of the company, with the CEO owning about 3 to 4% of the outstanding shares. So there's a strong alignment of incentives there. Smart lighting products with a strong presence in the Nordic countries. They've expanded into other areas like window coverings and thermostats as well. But the main bulk of the growth comes from the Swedish market. So these products are sold to electrical wholesalers and then sell the product to professional electricians. And this is the key of the thesis. So then the electrician in either house renovations or new builds install these products. So these products, as you can see in the slide, are controlled through an app. And then you can do things like control them remotely, set up timers or automated schedules. Since if you want to do like a movie night or like a movie routine, whatever it is, diming, you can do pretty much anything with the app. So as I mentioned earlier, the key of the thesis is that they distribute their products through wholesalers that in turn sell the products to electricians. And it so happens to be that the electricians are in love with this product because it makes their lives so much easier. So the first step in entering into a market is establishing the relationship with wholesalers. And Plaid do this by usually going to trade fairs or trade shows where they showcase their products to electricians. And in there, the electricians can see that this is a very high quality product that, effectively, it makes their lives way easier. So once the electrician gets used to one of these products, they rarely change, right? So they become accustomed to the product, they like it, they know how it works, and they rarely change. So it is not a coincidence that the electricians love the product. This is actually the result of relentless focus on making the electricians' work easier. So with Plaid, electricians don't need to draw any cables. They can just establish virtual cables within seconds via Bluetooth, I believe. So then they eliminate all of the issues associated with traditional cabling, and it offers flexibility to position light switches and controls as desired. So the first mode that the company has is this, and it is, the electrician is actually in love with this product. Now, the second mode is that the end user is also in love with the product, right? Because with just one app, you can do lots of different things. You can automate your lighting schedule. You can save energy as well, all within one app. So that's the double mode that Plaid has, the electrician and the end user as well. And all of this growth has come pretty much through home renovations and new builds as well. Although the company is trying to enter commercial buildings as well in the future, so this is actually an area of potential growth. And another thing that I think is very important about this company is that it is vertically integrated, right? And these are three implications. Well, the first of them is that if you actually have the expertise in all of these areas, you get to a level of product quality that is not easily done by other companies, right? So this is software and hardware, both of them. And the second one is that, because the company is vertically integrated, they're eliminating the middleman, and the company has really good margins, operating margins and strong margins. And then the third one is that it allows for the company to iterate very quickly. So any change that the developers want to do, they can just talk to the electrical engineers and so forth, and they can implement these changes in a very quick manner. Then it's important to know as well that Plaid built their tech infrastructure from the ground up. So, in a way similar to how Tesla built their electric vehicles, and the manufacturers, the original manufacturers, can compete against them. It's kind of like the same thing for Plaid, because the traditional light manufacturers, they have to retrofit all of this technology, which is quite difficult to do. So right now there's 4 product categories. They have the pucks, the luminaires, the window coverings, and the thermostat. Most of the growth from that Plaid has achieved, it comes from the pucks. And then after 2023, they introduced 3 other product categories that are setting up the company for exponential growth as well. So in terms of growth, 2023 was kind of a difficult year for Plaid because there was a real estate crisis in Sweden. However, Plaid managed to grow sales within this market, so that's very important. It's quite a big achievement. And in 2024, the company grew revenue at like 30%, so it's really good. Now, from the third quarter of 2023, the company is focused in balancing growth with profitability, and you can see in the top right corner, the green line, how operating margin has trended up from about 5% to close to 25%. So this is very important because, as I'm going to show you later, it's allowed Plaid to compound free cash flow at very high levels. If we look at the bottom left chart, you can see the underlying growth in installations. And I think this is a very important KPI, because if you're just following the revenue growth that Plaid is achieving, there could be certain changes in the way that the wholesalers buy this product. So if you actually focus on the underlying growth, so this is actually the installations, then you can see how the underlying market is doing. And as you can see, it's doing very, very well, with the Netherlands growing around 86% per year. In the bottom right corner, you guys can see how the EBIT, or operating income, is at all-time highs. And this is partly because of revenue growth rate and also the strong operating margin expansion that I mentioned. Now, up until 2022, the company was doing very well, but all of this growth was coming from Sweden. However, after they entered the Norwegian market, this was a very important inflection point for Plaid, because if you actually track the sales growth in both countries and you lag the growth in Sweden by around 3 years, you can see that the tendency of the growth was following a very, very similar pattern in both countries. So this was actually a very important milestone for Plaid, because it was a testament to the product quality that this company could achieve international expansion. At the moment, Norway is around 33% of sales, and it's growing very, very fast as well. As I mentioned, the operating margins have been trending up since the third quarter of 2023. However, gross margins have been trending down, and this is because they're introducing new product categories, so their pricing power is not so strong at the moment. I guess they're trying to be a bit less aggressive with the pricing until their product is a bit established in the market. And then lastly, just touching on valuation a bit, as you can see, the free cash flow performance has been really good, especially in the last 2 quarters, 3-4 quarters has been like almost positive. And then in the last 2 quarters has been really, really strong. So as you like to say, Antonio, stock prices track free cash flow per share levels, right? So at the time when I wrote this deep dive, the valuation was quite compressed, and it was trading at an EBIT multiple of about 21 times, which I think if a company is growing revenue around 20 to 30% and it has strong margins, like it is the case for Plaid, this was, it was a no-brainer. At the moment, however, the EBIT multiple is around 42 times, which is a bit elevated, but also at the same time, the company is growing very, very fast. It's launching 4 different product categories, and they're entering new markets. So as you can see in the top right corner, the stock has done very, very well. And I think in the long term, it will continue to do so.
Okay, Eric, great pitch. Congrats on the thesis, doing very well. So I just have a bunch of questions, really. I mean, one, initially, just so everyone sort of grasps this quickly, this is basically a company that makes life really easy for electricians, so that they can either go into this new house someone is making or into a renovation, just buy their stuff from this company, deploy everything correctly, have everything work beautifully for the end customer, and make cash, right? And
Exactly.
so, in your opinion, these guys have an ability to do that, which we haven't seen in Europe to date. Is that correct?
That is correct. Yes, there's a couple of competitors. For example, Shelly Group is a company that is growing very very fast in the space. However, the big difference is that they don't own the distribution because the electrician is not in love with this product, right? This is a kind of like do it yourself. So if you're renovating your house, you'll have to go yourself, buy these products, and then do the installations yourself. However, the case with Plaid is that they are professional electricians that they're in love with the product. They come to your house, they always choose Plaid.
Okay, and then just briefly, in order so that I understand how you're looking at this going forward, when it comes to the courses framework, how did you, like in a very summarized way, how did you believe when you wrote this deep dive that this company matched the framework?
Well, I think that's a very good question. I guess what I tried to look when I was researching this company is for some of the underlying KPIs. So at the time, for example, revenue growth wasn't really growing because of the real estate crisis in Sweden. However, if you focus on some of the underlying KPIs, like the underlying growth in the installations, it was doing very very well, right? And you read the earnings transcripts from this company, you could see how all of the products that the company were launching initially, the market was receiving them very very well, right? Um, so I think that is the big part about this company, right? They focus so much on the electrician, they make their lives so easy, right? So it's I think it's a couple of steps, underneath the financials or what the company is doing in this quarter, and actually thinking about what is the value proposition, especially to the electrician.
Okay, so you basically identified unreasonable customer centricity. These guys were obsessed with electricians, and that was how you developed the conviction that you expressed in the deep dive.
Exactly. I mean, at the end of the day, if the electrician is always coming back to buy this product, right, that means that you're getting that recurring revenue because once, for example, if you install a new product in your house, there's this little device called puck that you install behind the switch, and then if there's new products coming, like the shutter controller or like the thermostat, you can install every product within that app, right? So it's a no-brainer for the electrician. Once they choose Plaid, they're gonna stick to it, and in a very easy way, they can install new products.
Okay, and so with free cash flow per share rising as you have in the graph above, the stock up 140% since, how do you look at this thesis going forward in terms of return? So how are you modeling whether, obviously we can't say whether you're long or not, but if you were long or something, how would you be thinking about holding this company or selling it? So what are the fundamental drivers that you see that you think are fundamental to the thesis, and how do you see them evolving over the next 5 years?
Yeah, good question. I mean, I think the company is going to have a very bright future in the long term. Valuation at the moment may be a bit elevated, but I think, as I mentioned, there's a couple of growth drivers that it can take the company's top line to another level. So first of all, they're entering the south of Europe. So this can be new products and also a new market, which is really good. And then at the same time, further down the line, with the company trying to penetrate the commercial building space, this is another whole level, right? So thinking long term, I think if the company manages to introduce products and not dilute margins a lot, and also establish strong relationships with the wholesalers in each individual market, the company is going to do very well, right? So when they were launching a product in Spain, I think it was a shutter controller, I could see the company was posting some kind of like things that they were doing in the investor relations, and you could see how they were doing these fairs in Spain, in Malaga and in Valencia, I believe, and all of that is just targeting the electrician, right? So once they enter a market, it's because they know that the electrician already knows the product and is comfortable with it. So again, as long as they manage to, you know, show the product to electrician in every new market that they're entering, and they establish a strong relationship with them, I think the company is going to do very well.
Okay, so then going forward, it's two drivers. One, three. Obviously, continuing to penetrate existing geographies, deploy in new geographies, and then deploy new products. Is that correct?
Exactly. I mean, at this point, I think Plaid has kind of become like a platform to launch all of these smart products for your house. And they already have an established base in most of Europe at the moment, although not very developed at the moment. But it's basically a platform from where they can start building new products and keep on expanding their relationship with existing wholesalers.
All right, and so your view is that they can launch new products, new verticals within their platform at a marginal cost, or how do you assess that going forward?
You can say that question again, sorry, Antonio.
Sure. Your view is that they can add new verticals slash new products at a marginal cost by leveraging their platform, or are they not there yet? Or how are you looking at the idea of new products launched?
Yeah,
Yeah.
yeah. Okay, got you. I mean, this company they're selling hardware, right? So it's not going to scale like a software company, of course. But at the same time, if they gain the scale that is needed to increase operating margins to another level, this can be really good for the company. So costly at the moment, I think they're not there yet because their production is not optimized, especially given that they're launching in the last 2 3 years. 2 years they're launching 3 new product categories, right? So there's a lot of cost optimization needs to be going on going forward. However, the company has the potential because of the vertical integration to achieve very good scale, and because of that, good margins, even better margins in the long term.
Okay. And so, if I understand correctly, your view is that because of this customer centricity that you see in the company, you kind of believe they have a sufficiently high process power for them to pull that off correctly. Is that sort of your thesis going forward, right?
Yeah, exactly. I mean, the electrician is a very traditional worker, right? Once they get used to this product, they're not going to change. That means that Plaid can also increase their prices a little bit, and it's not going to backfire on them as long as it is up to a reasonable levels.
Okay, interesting. So, do you think this company becomes something like a bit of a winner takes all for the kind of electrician backend in Europe, or sort of how are you looking at this longer term?
Yeah, I mean, I don't think it's in the best interest for wholesalers to just rely on just one supplier, right? So I don't think it's going to trend towards that level, because there's many benefits for wholesalers in having different suppliers, basically because they can negotiate with them better. So yeah, I don't think it's going to trend there. But still the company has so much growth potential given the new markets and new products.
Okay, interesting. Well, Eric, thank you very much for the pitch. As I was telling you guys, Eric is an alumni of the Textile Goldmine course. It works really well when you're already smart, such as is the case with Eric. So, Eric, beautiful thesis. Congratulations on the performance of the thesis in the abstract. Um, Up 140% since you wrote your deep dive. And again, thank you so much for coming on. Is there anything you want to say just before signing off?
No, not really. I just wanted to thank you. To be fair, I mean, this is partly thanks to you, and yeah, this is just very nice being here speaking to you. So thank you so much.
Awesome. You're more than welcome. And thank you again for coming on, Eric. So
Right.
hopefully, oh, guys, if you want to follow Eric's work, we'll be linking to his blog in the show's footnotes. I'll be linking to his X profile too. So Eric is updating this thesis and a bunch of other theses like Zoom, which is the basically the video call platform, which Eric believes is much more than that. Although the market is now stuck in that narrative. So if you guys want to stay up to date with Eric's work, be sure to check out the links in the show's footnotes. And thank you very much, guys, for joining us. And see you next time.
Thank you, Antonio. Bye bye.
Bye bye.